Okay, so this is a fun name of an episode, and I can't take credit for it. So drink now, pay later. There is a whole story behind this, and we'll get to it, but it's a fun concept, and it's also a everything but the kitchen sink drink. So I've got it with me. Yep. And so once we start drinking it, I don't know that there's any way except for to be tipsy. But I won't hold us back any further. I'm going to go ahead and say, let's do introductions. I'm Liz Scott, and so most of you know me. So hey, I have got a practice in Oklahoma. We do a couple of different things. We work with clients who are in QuickBooks, mostly online, and we do everything from e-commerce to a couple of businesses that we've got because they're restaurants and they came to us from other channels. Maybe they've got a couple of both things happening. So today's topic is very near and dear to my heart. I won't give too much away, but being able to keep point of sales and e-commerce straight is definitely a critical issue for us. Heather, do you want to introduce yourself?
I do, but guess what? We didn't update the slide. Our slide needed to be updated today on the slide. So I'm Heather Satterley. That has not changed. I have not changed from being Heather Satterley. However, I am no longer, well, I'm still the founder of Satterley Training Consulting, but as of last Friday, I am now the Chief Innovation Officer of Growth Lab, Finance as a Service. And I'm going to be leading a new team, which is Satterley, powered by the Growth Lab, which is going to be focused on process optimization for both accounting firms and for our business clients. So I'm going to be joining, or I have joined, a group of 35 other amazing, super talented, forward-thinking, awesome people who are going to be taking care of our accounting and tax clients. And then we are building a brand new department within Growth Lab that is going to be focused on the process optimization, geeking out to the integrations and doing all of that amazing stuff that I love so much. So I'm really, 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 really excited about my new role. And I don't want to spend too much time because I really want to focus on all the great things that CommerceSync has to teach us today, but I will talk more about it during another episode. I'll spend a little more time talking about my new position, my new role, and Growth Lab as a company, because it's a really, really cool company, and I'm excited to share about it with all of you.
So,
and I'm in Rhode Island. And thank you to everyone for your congratulations. So.
Well deserved, well deserved. We also want to say thank you to our Champagne Level sponsor for 2022, Ignition. So yes, they dropped the practice and they are now just Ignition. And Heather and I have had a really great time being able to go in, test their templates. We are going to have an episode coming up that's going to be talking about the templates that have been created and are available to everyone. They're going to be happy hour templates that you can use inside of Ignition to be able to create engagements. So super fun thing coming up. I also want to say thank you to CommerceSync. So we're going to be talking more about automated bookkeeping and how that works and what kind of new cool stuff is happening over there. And to be able to guide us through that, we have a special guest here. Would you like to go ahead and introduce yourself?
Sure. Thanks, Liz, and congratulations, Heather. Much deserved, and look forward to hearing about that sometime soon, one of the bullet points in one of the later slides. So yeah, I've basically been around CommerceSync since we first launched. We were a launch partner of Clover's in 2014, and since we've grown to over 13,000 paying customers. So we've got a tremendous team, both on the customer support side, product marketing, engineering. You can't get to that level of competence and confidence from the accounting community at large without a great team of players in that regard.
And you are always a snappy dresser.
Thank you. I had to change it up a little bit. I was on Appy Hour in March 2020, and so we all know what that month was like. I wore the same jacket, but this time I got a tie that was a little more sangria based.
Bow tie last time, right?
No, but close enough.
Okay. Yeah. Well, many of you have also seen him at Scaling New Heights, kind of going around and talking to us. So familiar face. But our agenda today is to talk about drink now, pay later concept. And then we're going to be able to have a drink toast, and then we'll talk about what's coming up in a next episode. But to go ahead and begin our conversation, I want to start with what are we talking about today? What's on the roadmap for our agenda? And really the topic here is all of our clients, I wouldn't say all, a lot of our clients have decided to sell online. And it's like you said, the last time that you were on, it was right after COVID became a thing. And so we were like, do we talk about it or not? And it was this really kind of interesting conversation that happened behind the scenes. And we decided to go ahead and mention that, this pandemic was in place. And then here we are. But because of that pandemic, there's been a huge growth in online sales. And how do you manage it? So that's part of what we're going to be talking about. And then recording the online sales. So once you have those happen, and I'm going to say online, but really it can just be any type of point of sale solution, but being able to get that data and then put it into QuickBooks, that is a key part of how we keep our sanity. So when we're thinking about automated bookkeeping, that is that journey that we're taking, because a lot of those sales solutions don't have mapping into QuickBooks in ways that we would want it to be. So this is, go ahead, Heather.
I was just going to say, to speak to that impact of, the pandemic on online sales, I was just looking at trade.gov, and they were saying that it actually added an additional 19% sales growth in the e-commerce sector for 2020, and an additional 22% sales growth to the existing 9 and 12% of regular forecast sales rates. So that's huge. If you think about that, that's, 19%, that's a huge jump in a single year.
I'm not seeing a decrease in that transition either. Yes,
No.
The doors have started to open up, and people are starting to now be more in person as well, because we missed that as humans. But the online sales, the need for being able to have point of sale solutions, that's not going away. I'm not seeing that.
Absolutely not. I mean, it's in 2021, they were saying that it was a 2.6 or $26.7 trillion market.
It's huge.
It is huge. And it's global. That's the other thing that it does for our clients, is it allows them to trade globally, which is something they may not have considered before.
And there's so many components of that we have to be aware of. And so if you didn't get to join us in our prior episode with Commerce Sync, then you wanted to go back and maybe look at that recording, because we were talking about how do online sales happen? How do you get the data from point of sales? We're going to be talking similarly again, but really, we've got to stay current on what's happening. So I'm excited. I'm going to go ahead and share this next slide. And I'm going to even say, do you want me to pass presenter role so you can take over?
Sure. Yeah, I guess that would help me drive cadence. So
there you go.
Actually, no, I take that back. Why don't you do that? I'm not prepared correctly to present from the Mac.
Sure.
That'll be too diffuse.
Well, then just tell me when to click.
Sure. Yeah. So thank you, Liz. Look forward to, oh, sorry. I had a question from one of my colleagues who should be attending. That's saying, can I hit pause right now and just connect with her real quick? My apologies for.
Sure. We're going to go ahead and keep going. But if you need to reach out and
real quick.
Yeah, no worries. The thing that, if I'm thinking about online sales or, any type of sales channel, we've moved past the point that QuickBooks Online or QuickBooks is not always the best solution for being able to serve customers quickly if there's a line or if it's online. So there's the need for being able to put your client in different platforms, or they might come to you in different platforms. So this reality of how all of this data gets into QuickBooks is really, really key. And each of these components makes it a little bit challenging. So you might have a point of sale solution, and then you've also got, payment options. So that's kind of a cool thing that we're going to talk about. And then how do you connect all of that data and then push it over into QuickBooks, either in detail or consolidated? So sometimes, depending on the type of client, you need a variety of options.
And, Liz, I would say this is one of the biggest mistakes that I see with my clients that are selling via e-commerce, is that they don't think through what makes sense for reporting and for logistics, within their operating of their business, right? So they start their QuickBooks Online company. They're like, I have inventory. So they turn it on. They enable different features within QuickBooks Online. And a lot of times that can be the kiss of death, right? Because a lot of these solutions, they take that whole inventory functionality outside of QuickBooks. And, that can really be, can be an issue. So where I'm going with this is I'm saying that when you're looking at implementing it with an e-commerce client in QuickBooks Online, you really need to look holistically at what are the client needs, what is the marketplace or the e-commerce marketplace that they're using. Is it Amazon? Is it Shopify? Is it, are they using Magento? What are the things that they're using? And then also, what are the other operational needs that they have before you even think about starting to connect the data? And we're going to see, one of the great things about Commerce Sync is that you do have the ability to do it on the transactional level, which does make sense for a lot of clients. But then you also have the ability to sync summary, right? Which makes sense, honestly, in my opinion, for more clients than the ones that want to bring in transaction by transaction. Would you agree with that?
100%.
Thanks, Heather. And that's what we've found over the years as well. And it varies based upon the type of business, especially when someone is online. We can touch on that a little bit more. So apologies for the delay there. We wanted to have someone to try to answer questions or at least field them so we can follow up later, because there's utility in that. Anyways, and this person is responsible for this wonderful artwork, as well as this wonderful mug from which I will be enjoying the fruits of that labor, so to speak.
Beautiful.
Yes, so I'm not sure that I can vouch for the quality of my mug, but I can vouch for the quality of Commerce Sync as well as Liz and Heather. So if we can go on into the next slide, we'll get going in earnest. What I wanted to do is just reiterate a couple of things real quick before we get into the real value of this webinar today. Automated bookkeeper, we think now that the need is maybe more obvious than it might have been when we started going into market in 2014, but we save time, we're accurate, we err on the side of caution, and we have a dedicated team of customer experience reps. I'd say that we consider it a part of the product in a way that a lot of other people don't, or you have access to someone who knows payments really well or accounting really well, but not both. And so working with us, and it's not just for merchants, it's also for sales reps as well as bookkeepers and accountants. So part of the value prop there for you is it would help you serve more clients faster by making this one piece that's very, very important that everyone has to do more efficient. Next slide, Liz.
So might as well start early, right?
I wasn't sure when you were gonna throw that out there, but
Let's dive in. Anytime that you're talking about e-commerce or point of sale, need a drink.
Well, I'm about to get into the tax bit as well, so.
And this one's fun. We have a whole bottle of red wine. I mean, telling you, it's a party.
Sign me up for that. I mean, whenever I see a bottle of red wine, I'm like, please, I am totally in 100%.
One of our colleagues is actually writing a book about sangria recipes. And so it seemed particularly apropos for the subject matter and what sangria does to you and so on and so forth.
I love it. I love it.
It's awesome.
Okay, so as far as summarizing what we do, the next two slides go into real depth in terms of the call outs here. So I wanted to pause to see if there was anything in particular that Liz wanted to dive into, but this illustrates, a picture tells 1,000 words. I think this one's up to 10,000 about some of the things that we talked about. It's a daily summary. In this case, we are using Vend as a backdrop. Most of the slides will actually use Square as a backdrop. All of this information is publicly available or something that you could make happen. But in this case, we happen to be using Vend, and so it shows a daily summary for retail. We very, 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 very rarely see someone in retail who wants those individual transfers, because the summarizing and aggregating all of the day's information has the same exact effect as the chart of accounts, and it is much more usable, especially when you start to consider trying to reconcile with the books. We'll talk about some subtle or not so subtle differences between assets and income and asset and different kinds of assets later on. We show some of the bells and whistles that are nice in here, like gift card. We know that when someone buys something with a gift card, you're not getting more money. It's just coming off of a liability from when you actually sold the gift card. And in this case, for the purposes of both usability as well as illustration, we're showing where gift card might be different than discounts given on something as well. And discounts specifically as an income, it's just negative income entry in the same way that refunds would be. That's something that's not intuitive for tons of people. So,
the other thing that I would say here, might as well call it out, that you have so much flexibility. So you're saying that, it's negative, you've got a negative income. So we've got the ability to be able to map our own fields to say we need it to tie into each of different accounts. There's options to be able to make sure that the bookkeeping is recording the way that you need it to.
Correct. And there's even more flexibility with the way you have the item account relationship in QuickBooks, where if something isn't like immediately addressable, we have a team that can help through workarounds. So some of that other flexibility, call out number 6, is the entire day of payments aggregated. There are a couple of options there. In this case, only one tender type was used that day, and there's no reason to separate those into separate payments. It provides no value because it's going to be the same amount in our best friend undeposited funds. But there are other cases in which we do want to separate out, say, credit card payments and aggregate, cash payments, because the credit card payments are targeted on settlement activity. And that's a real big thing for reconciling your books, making sure that the point of sale provider gateway is saying they paid you what you should have, is saying you should have been paid this amount, and the bank is saying you were paid that amount, and making sure those match.
So let me ask a question. This is an invoice and we've got a payment attached to it. So in this case, are we looking at one customer's invoice, or are we looking at the daily total, and this is the invoice for the daily total?
That's a great question. It kind of ties back into the origin of QuickBooks. QuickBooks wasn't really built for aggregating days of sales. It was really built because Scott Cook's wife wanted to get paid for her business, and she wasn't sure where things were at. And so to get daily sales summaries to work in the context of technology that's old enough to run for president, we have to do certain things. And so a customer is always required on anything that's called a transactional entity, in some cases vendor on the expense side of the equation. And so we have to, in this case, it is one business, and we're aggregating it all under a synthetic customer called Venn customer. And we have that construct for every payment provider that we work with. Now, there are a couple of different things there. If it's individual sales, then of course we can actually map in that individual customer information. Also, it's a good construct for if you've got multiple locations for easy reporting, because we can just put a different customer on each of those daily summaries without real work beyond the creation of a customer and us putting it into a dropdown. And then it'll be much easier to report by location, no matter what level of QuickBooks you're using. A lot of the product decisions we made over the years was not boxing people out of feature functionality because they weren't on enterprise. And a lot of things like categories, tie into that, like why we implemented it one way instead of another. And so just the whole construct of the use of the customer field tells a 40-year saga of accounting technology. And speaking of number 8 there, this is a QuickBooks desktop screen. The others that are later are QuickBooks Online. I'll say that almost 100% of the time when I say something about QuickBooks Online or desktop, it works in the other direction. The two big things are with QuickBooks Desktop, you have to get something that's going to be able to access the company file, and then also support for multiple non-zero tax rates. which is an important point that'll come up in the context of online.
So, Julie, yes, that's exactly it. So what you're looking for what I was looking for was the ability to not have 1,000 different payments in one day and try to match up the bookkeeping whenever it came to deposits in the bank. Are you ready for me to go to the next slide, or do you want me to stay here for a minute?
Next slide, I think, and you can probably skip by the next two unless you already took them out. Yeah, this is at great length, basically. So if this is accessible or someone wants more information, I can send this across.
And these slides will be available for download after today's recording.
That's why I put that on here. I wanted to touch on the picture because pictures with callouts are nice. Reading off slides is boring.
Well, and it's not boring. It's exciting to us, but the sales tax piece right here, this is important for us to be able to say, how do we want to record sales tax? And back on the other screen where we're talking about Vend, you could see that Vend was the one who was actually the point of sale, but inside of QuickBooks, sales tax was being calculated. There's options here, and I don't know how much we're going to get into it. Is this a good time to talk about that?
I've got a dedicated slide to talk about that.
All right.
I want to focus a little bit more on buy now, pay later, but since our last Appy Hour, I'll rifle through this really quick. We thought we were all going to be back at work on May 2020. Mother Nature said, hold my beer or sangria or kombucha, whatever the case may be. But Liz and I and another colleague had happened to meet at QuickBooks Connect before. And so we got on the schedule for an Appy Hour then. Happy to say a couple of different things. We grew over 50%, which we weren't sure where the graph was going to go, but a lot of commonality for some of the positive things that have been said earlier on from like a macroeconomic perspective. We relaunched our website, including a nice QB Pro Advisor testimonial, which was really cool to get someone to speak on our behalf on camera. And then also we happened to be acquired. I put a typo on here that I just noticed in kind of dry run prepping. And then I realized that maybe we invented a time machine, which is a great segue into the next slide. So one of, if not the most important thing we did was we have this ability to transfer information free historically. Typically, we wouldn't offer it for free because, we have to run a business and pay our employees and pay our own bills and so on and so forth. But one of the things that happened is that I was working with a CPA in March that was having some trouble, was frustrated with one of our competitors, and then had a little snafu here. And occasionally I'll jump in and work with folks directly. I like staying on top of voice of customer, even though we have a dedicated team. And towards the end of this, was able to, get to a good resolution. She mentioned, hey, would you mind catching us up because we need to complete PPP loan paperwork. And then the light bulb went over my head. I was like, oh, we can be really helpful in this regard. At the same time, we have people leaving tickets like, I need to disconnect, ask them why, because the world is on fire. So we immediately put in this policy where we would both offer up to 12 months of free historical transfer, no questions asked, betting on the come that people wouldn't just leave. So we're kind of making a bet on the positivity of humanity. We also put in an offer so that if people wanted 2 free months of service, that they could stick around and have that. And it totally worked. The proof is in the pudding from growth. But that pales in comparison to just playing just a small but a nice role in helping small business over the past 2 years. And historical transfer will always be here. It's very important. If you sign someone up on a payment service, you don't have to sign up for CommerceSync right away because we can get people caught up and it's going to be accurate. It doesn't matter whether you do it today, tomorrow, or next month. Each day is going to be accurate unless you start changing things like settings. And don't get me started on time zone math. So that's for another drier Appy Hour. Okay, so I kind of spliced together a couple of slides from my enhanced production Square account. I've been working with them for a long time. I actually worked with them before the accounting context. And they happen to be sort of the best backdrop for the couple of topics that we want to talk about here. And in this case, Square acquired Weebly a couple of years ago. And they were, like when an acquisition occurs and you intend to bring them into your product versus what we're doing, CommerceSync is going to keep doing what we're doing. There's going to be some kind of process in that regard. And then the pandemic started and it went from 0 to like 160 miles an hour in a McLaren regarding the usage of Square Online specifically. And behaviorally, what did this come down to? Well, it came down to things like one of our prominent sellers is like a botanist kind of plant shop. I'm not even sure what the term might be for it. And so they sell a lot of potted plants, but they also do like landscaping things. And the common user experience before would be I would go in and buy a potted plant. Well, now suddenly in April 2020, you would pick it up 2 days later, or maybe not at all, despite the fact that you paid for it and it went across the lines from a banking perspective. So I'll come back to that in a moment if we want to move on to the next slide. The actual more acute impact instantly is tax because of the way that a third party, or formerly third party, now first party, but still its own kind of code base, a seller was doing tax versus the way that a point of sale does it. And we know there have been a lot of acquisitions in this regard. It doesn't just stop at Square. And we believe if you look at the rapid kind of consolidation of the market, PayPal doing things like going and buying Zettle and launching it in the US and so on and so forth. And so what's interesting is we know, I think everyone here knows some of the intricacies of working with sales tax on QuickBooks Online. And the way that it was coming across from Square would be a bit different than Square Online. And then suddenly QuickBooks Online is like, I don't know what to do. This looks like two different rates. So we had to do some really tricky kinds of things to do that. If you move on to the next slide, that's just for normal people. I want to go through this relatively quickly because this could merit 3 Appy hours if you really kind of dove deep into this. And in the spirit of the name of our presentation, we want to focus on the rapidly growing buy now, pay later. But these types of sales tax topics aren't going to go anywhere. There's a looming consideration that is the federal government going to step in and say, you have to collect sales tax in the jurisdiction of the buyer, not the seller, sorry. Because that radically fragments tax in the US and like nowhere else on the planet, which is kind of funny to think about. That also the global QBO version does support multiple sales taxes. But be that as it may, there's been some Supreme Court rulings that sort of like lead towards that kind of precedent. And there's going to have to be some kind of reckoning here. Like some people are either going to have to step down and make decisions in the other manner, or we're all going to have to live with, collecting sales tax in the jurisdiction of the buyer, which because it can go down to not just the state, but the county and city and use tax and sin tax and all of that jazz can get pretty sticky pretty quickly. We're on top of that and want to be able to make the right kind of reactions based upon where the market is going. Liz, did you want to comment?
I was just going to say that, yes, all of us here that have dealt with sales tax agree that it's painful.
And that really ties into the next slide. I can only imagine that Intuit would be working. No, sorry, not next slide, next bullet point, previous slide.
Oh, sorry.
I misspoke.
Okay.
That ties into the next bullet point of like if and when QuickBooks Online is going to support tax a little bit more robustly in that regard. Other things to talk about are we do some pretty clever custom tax rate mappings. We automated some of that to just get through April and May last year, quite frankly. But there are also capacities by which someone can really just override automated sales tax. And that can be like some legitimate things, like in, I think, Las Vegas, if you offer fully discounted cigarettes, you still have to collect the sales tax on it. So if you send over like a $0 order, or that wrapped into an entire day of sales, Intuit's not going to auto-calculate what was actually collected at the point of sale. Oftentimes employees also fat finger sales tax. We see people put like multiple rates on items when it shouldn't have been done. And just because it shouldn't be that way doesn't mean that's not the money that went across the wire. From that bookkeeping perspective, we try in that and many other ways to be very faithful to what actually occurred, because that's ultimately what's going to be represented in the books in the bank. And then finally, and this is kind of a future thinking one that may be closer to our faces than we realize, are just a couple cryptocurrency implications. I don't want to get too fancy here, but there are a couple of really easy ones to kind of wrap heads around. When you buy something with cryptocurrency, you're supposed to pay capital gains tax, coming down to the fact that the Fed treats it as an asset, not a currency. So I think the week that Jack Dorsey rebranded Square as Block, a bunch of prominent, crypto coin CEOs were having a meeting in Congress. So, we'll see what direction that goes. But in the meantime, it's one thing if a customer buys something from a business or a friend with Bitcoin and does or does not pay the capital gains. But what about businesses that are putting corporate, expenses on things like corporate cards or custom debit products like Stripe and Square have put out? What if they're doing that with Bitcoin, and what's that going to do from an accounting perspective in terms of supporting folks? So I think that's going to be a really interesting conversation over the next couple of years. Next slide. And here's where I delve deeper into a concept that we call same-day delayed fulfillment. And what it really comes down to is decoupling something that's coupled when we're just sending across individual transactions and typical pre-pandemic daily summaries. This is the case where you're paying for something one day and it's probably going across the wire the next day and it's going to be part of a deposit, but you're not actually picking it up, like I said, until later, or perhaps not even at all. Sometimes, folks would have deposits kind of dinged up because they left an order open for like 2 months and they finally got around to looking at their books. I know that there's probably some people nodding with that experience of people not looking at their books, for a while. That's why January 1st, I'm sure, is a much more difficult day for y'all. It's a difficult day for our team because we get that people waking up on January 1st, shaking off whatever they did the night before and realizing that they have to do something about their books. But back to the subject, what we're doing is we're fundamentally separating income, which is the thing that CommerceInc really excels in, from inventory. And they're complementary, but they're not the same thing. Fulfillment is a little bit of a different story. So that's different than a case like subsequent payments. An example that I like to use typically is a caterer who takes, $1,000 deposit for a cake. It's a really nice wedding cake. And I just realized I said $1,000 for a cake. I don't really have a frame of reference in that regard. But in all seriousness, ends up getting it all paid down upon delivery. And so again, that kind of splits up the income settlement sort of inventory relationship. Now, where that's really come vital is the rapid growth of buy now, pay later recently, going from a $50 billion industry to a $250 billion industry projection in 18 months or something in that regard. So what we're going to focus on for the rest of this webinar is I've taken down a representative buy now, pay later use case and illustrated it in the context of some of the bells and whistles that CommerceInc has at a very kind of fine-grained basis with a lot of QuickBooks slides illustrating this. And so if we want to move on into the presentation. So here, one of the things that's driven us is another acquisition by Square of Afterpay. If you go in and create a Square account, you can create Square Online, and they'll probably enable your Afterpay account for some kind of free transactions up front. Interesting that Apple Pay and Google Pay are also accepted, but we know how everything just kind of gets jumbled up in the payments industry. Some of you may be very familiar with buy now, pay later from the context of companies Affirm and Klarna that have really been kind of like the Coke and Pepsi, the Uber and Lyft. I don't know which is which in each context in buy now, pay later. And now suddenly it's kind of caught fire alongside some of the other things like the implications of online and online driven, quote, omnichannel tendencies we thought would happen in 5 years instead of what was basically like 5 weeks. So for the purposes of illustration today, I've found a lovely couch. I need to replace my couch and I might consider buying this couch. It also happens to be vaguely CommerceInc branded. So that we'll use that as the backdrop for what are 4 installments for Afterpay. In the case of Afterpay, by default, if you elect to use it as an end consumer, you have to pay in 4 installments that are 2 weeks apart, and you have to pay at least the first installment as soon as you buy. And so we're using that as the kind of example here. If your credit's good enough, or if you use it enough well, then they may give you a reprieve on those first 2 weeks. But right now it's pretty consistent within its user experience, and thus a good example for this. So now we'll get into the accounting fun. Oh, before we get into that, I wanted to compare it at Liz's request when we were chatting the other week, just for a couple of light products, Square Capital and Square Card. Afterpay is more of a function of assets into undeposited funds so that they can be deposited later, whereas Square Capital and Square Card are functions of deposit activity. So Capital is just like your typical kind of merchant advance type of thing. In this case, like in other cases where settlement activity is more readily available, in this case, it'll just be withheld from deposits. So you'll take a $10,000 loan or whatever you've been underwritten for, and it'll take a certain percentage every time you get a deposit based upon all sorts of risk factors over into a liability, out of a liability account in that case. And then Square Card is sort of like, typically, if you think of our flow as you've got income, asset, undeposited funds, asset, bank account. Well, something like Square Card, and there are other debit products out there, either in market or being created, sort of interpolates it in between undeposited funds and the bank account. So it's sort of like money going from one of Square's pockets to the other. And the chief advantage there is the instant access to funds. Another way to put that is that you would be able to say you are running something like Instacart, being able to issue these debit cards that your employees can use without having to go through the typical corporate rigmarole. I'll touch on that at the very end, but you've probably seen, and we've seen this both in market as well as demand, a lot of play around corporate cards and accounts payable, unicorns like Brex and Ramp, things of that nature. So I just wanted to differentiate what we're talking about here, because I'll illustrate deposit, but these are all complementary functions, and they don't step on each other or really overlap.
That's nice that you're talking about all these different types of payment and all these different things that we're seeing, and we're using Square as the example. But what this means for us is there's a whole lot more to manage. So being able to have a tool to help us in all of the management of the funds is really important to us and beneficial.
So up to now, we've had facility to handle merchant advance accounts and as well as exotic debit products, and now we're getting into the more buy now, pay later, subsequent payment types of flows. Great. Okay, so again, we have a lot of optional features, and this is just an example that's depicted without any of the bells and whistles. So my first installment, I highlight that. If you go to the next slide, love me some call outs. And so you'll notice that it was 1/4 of the money with a penny rounded against the generic Square customer with quote Afterpay terms. 2 weeks isn't, or 2 months isn't actually something by default in QuickBooks. And so that's something that I think is the end game goal. And then finally, everything being rolled into the same item and Square sales, essentially. So just a generic income account that this user ropes everything to. In this case, it would be aggregated with all of the other sales for the day, but I wanted to simplify things for the purposes of illustration, since we're trying to look at a very targeted workflow. Next one. So effect on the chart of accounts. I've got a lot of interplay between screens and chart of accounts here that I think will be appreciated in terms of accuracy. It's just 496.18 that came out of accounts receivable, leaving it with the balance that you would expect. I did this on a completely fresh QuickBooks account so that it's not sullied with a bunch of test data and then thus useless for illustration purposes. And then finally, the one payment in undeposited funds. Pretty straightforward stuff. Although we talk about how the rename to payments to deposit pretty recently. So just I'd be curious to talk to people about accounting things like Accounting Web about things like that and get a pulse. Story for later. So next slide. Now we get to our second installments. So we bought this. I came after this and used Afterpay to buy this couch. And now April 19th rolls around and almost the same amount. Again, it was not, once we factored in tax, then you have to actually add a penny somewhere. So in this case, I added a couple of touches. In these cases, you may actually want to keep track of customer information. I think your mileage will probably vary, but you want to keep track of like who owes you money, who's reneging on you. Obviously, the buy now, pay later, or whatever version of that you may be using has risk kind of constructs around that and so on. And so I think that's going to be a your mileage may vary thing. But for the purposes of illustration, I wanted to put it in here. The other tricky aspect is that you have to kind of treat these sales as separate from the daily summary because all your income kind of came in at one place, but you're not getting your kind of asset breakdown until others, and it could mess up your kind of income recognition. So what will emerge in the coming months, I think it will be an option there. Like, do you want all these individually, or do you want to recognize all of the income on the day that it occurred? And quite frankly, the former approach is easier to work when we talk about reconciliation with deposits. So that'll be a little bit of what do people want? What are accountants advising them to do in that regard? And a much simpler case, instead of putting everything into one income account, we're mapping it by category. This is a case where we actually, if it doesn't exist in QuickBooks already, we'll create it so that people don't have to keep inventory like in sync in two places and being authoritative at the point of sale. That's proven to be very useful over the years. And this couch was categorized under couches. So they did a good job there. You probably wouldn't be surprised. We see things like emojis or like a different item having a different category, thereby making it somewhat useless. But by and large, it's been a really manageable kind of feature, really since launch, basically. Any questions here before I move on? Okay. And then we'll get into the effect on, oh, I went into the payment details here. Yes, so we see customer relationship is really, can be funky in that regard, so you have to be accurate. But we see a specific payment method called buy now, pay later. Now, what's important about this, and also, I don't know the experience of Liz, Heather, or anyone in attendance, there's been a lot more use of Cash App recently. It's offered a lot more at the point of sale. They both need to be treated as credit card transactions. In the case of Cash App, it's debit card. The way that it came about back in the day was pretty cool. It totally hacked the payment system because it wasn't done. If you remember when it launched, it was used for free peer-to-peer transfer, and that was pretty cool. And you can split up your lunch easily or something to that effect. Instead of it being an actual like payment, it was a reverse refund, which couldn't be charged fees against. Therefore, they could charge it, make it free. It was a clever thing. So that's evolved a lot over the years. And now it's still fundamentally almost all of the time a debit card transaction and thus prone to settlement activity. So you have to treat it just in a very specific way, like the type of payment method within QuickBooks and the fact that it lands in undeposited funds / payments to deposit. You have to treat it that way, otherwise it'll break reconciliation processes. The same thing with buy now, pay later. It ends up being treated as a credit card transaction, subject to settlement. And so that's what we're illustrating in this screen. Next slide. Now we get to the chart of accounts. So I just incremented the accounts receivable in isolation. That's what it looks like, the open balance against that couch purchase. Me being the friendly neighbor is represented here. And then we see just the income was all recognized on the day that we entered that invoice singularly and individually. Again, there are other options on the table in that regard. Either will work fine for reconciliation. Next piece. Okay, so I've still got the customer detail on, but what I did was I added both discounts and line item detail. I'm going to go to discounts first. If you remember from that kind of little introductory slide regarding buy now, pay later, it was technically discounted. The original cost of the couch was something like $3,700. I'm sure that's accurate, and they're trying not to trick me from a UI perspective in psychology. But be that as it may, it would be more accurately reported if we put the, it was $3,466. That better be a nice couch if I'm paying MSRP or whatever. But the accurate way to do it would be to represent that discount in a separate account and make it taxable so that the tax all comes together. And you'll see that the total is exactly the same. It depends on what's being reported by the payment provider. Sometimes that information isn't reported accurately or at all, and then the preference of the customer. And then finally, a complementary feature to sales by category, which is all about the income accounts, is line item detail, which is all about what the item is, what its quantity is, are there variations, things of that nature. And so in this case, it could be mapped to either the individual sales income account, like the aggregate account, which would be the case here, or it could be mapped to its own couches category. People think it's like another level of detail, and in a way it is, but it actually touches on, again, like details that are more income-based and details that have more kind of inventory-based implications. And that's a way in which CommerceSync is complementary to services that are more responsible for putting inventory in and, you know, managing auto reorder levels and things of that nature. Next slide. And then finally, we've got fully loaded. So all of the features that I talked about all in at once. So I'm buying my custom Levi sofa in terracotta. And I think I meant even to put an orange variation in the description, because that's something we do. It's in the couches income account. It's got a discount. It's fully paid now. My credit is great, so I paid it off on the 17th, the due date. Maybe I'll get a reprieve next time from our friends at Afterpay. And so this is the kind of summation of all of that. Any merchant or bookkeeper on their behalf can really pick and choose from any of these things. But at the end of the day, fundamentally, the reconciliation of dollars expected to be received and dollars actually received is going to be the same. It depends on the needs and desires of the business. And so the kind of coup de grace here is the final slide. Oh no, I actually have more than one slide here. I broke up the chart of accounts much more because there's a lot of content, even with one buy now, pay later sale. So accounts receivable, you know, it's clean. Next slide. And then the final chart of accounts various, since we had different types of transactions. So the way that the tax breaks down, the way that in this case, I use Denver because I live in Denver as an example. And so it just kind of auto broke things out. And so that's what we're seeing here. The total for couches as it was pulled out from the actual discounts given. And then finally square fees. And I think do we need to go to the last slide, the next slide to get to that, if you wouldn't mind? Yeah, so I said I wasn't concentrating on the deposit, but I did want to tie it all in a bow because I'm making these promises like you can do all of these crazy things on this side of the ledger and on this side of the workflow, but at the end of the day, it's going to end up being the same. And so in this case, if you look at the date column to the left, this is typical unless you're going across a weekend. In this case, I wasn't, you'll get it deposited the next day. So I made the $496 something deposit. And then it came across net fees the next day. And I believe the next slide shows this. Yes, and so this is one of those deposits. And again, a radically simplified version, but it shows off, you know, what were we actually depositing and what kind of fees occurred within this. Total side note, I noticed some restrictions in brand new accounts for the flexibility on those fund lines. I don't know if that's something being A/B tested. I've noticed that Intuit A/B tests a lot. And so coming soon to an accounting web near you. But the funds go into my bank account after having netted out the fees into the expense account, which is accrued all of those, as we saw with my nice little chart of accounts picture. And then the date, this is of course the last one, but there are 3 more that are basically identical to this.
So my question here is how much of this screen, so this action that took place, is automated? The
All of it.
capturing of the fees, the capturing of the deposits?
All of it. Your mileage may vary depending upon where you are in payments. There are more and less traditional things based upon, case history about people being very guarded about what's called the discount rate, which has always been a funny name because it's what the merchant is being charged per card present, card not present, debit, et cetera, transaction. So some are more open than others. And in this case, the information is provided to us, and so we can get as granular as possible. If this level of granularity isn't available, we always go into every kind of channel offering with like, all right, how are we helping people do our books with this? And we can aggregate payments in funny ways. That's how Clover works. They do fees on a monthly statement, not in this kind of way. But if we roll up payments in a certain way, then it's going to match their bank statement. And that makes people very happy, including bookkeepers and accountants.
And you're saying things I want to make sure that all of our listeners are aware of. We're giving right now this Square example. You've also talked about Clover, and you've also talked about, I don't know if you talked about Stripe, but you've got lots of different platforms that you connect to, and so many different options for being able to pull in that data, that sale, and then also how do you want to see it inside of QuickBooks? So consolidated, details, summary, whatever it is that you're needing to see at that level. And then also the payment piece. So we're going from all the way from the sales channel to all the way being able to reconcile the bank account. That whole piece has been such a pain, and I'll just leave it there. It's been such a pain to be able to track for a lot of e-commerce and point of sales clients that this is a genuine time saver.
That's fantastic. Maybe that's a good time to move on to the next slide. I know we're kind of out of time, but I'm also out of slides. So that's great. I should also put a shout out to Vend. I forgot to mention that they're rebranded as Lightspeed X Series now. And so we're starting to work with them. They're actually, we have them in production and they've been great to work with. So future considerations, I touched on, corporate cards, their usage and that tying into things, and every business that takes in money has to spend money at some point in time. And so we actually have a side offering that we're toying with making more prominent up to the point where I could provide this level of content. We'll be at the inaugural accounting web. Thanks to Liz for giving me an introduction to Seth Weinberg over there. So that'll be really fun. And I'd love to connect with some folks here, especially with just some, kind of questions we have for the accounting community with what we've been seeing. And then finally, last and not least at all, you can always get in touch with us at support@commerceinc.com. We have a dedicated team of customer reps. The poll just kind of came and I can't vote. No, but I like it. It's not just for merchants, it's also for sales reps and bookkeepers and accountants. And I even have access to these. Like I said, I like to stay on top of voice of customer. And it's really great when we have a good relationship with an accountant in one or maybe multiple of our channels. We have people who support Clover and Square and Stripe alike, getting into Shopify. We love it when we're able to satisfy one accountant because we know that we can, help satisfy even more of their clients, not just one.
And I have to tell you, Stephen, I had a call with one of your team members about a month or so ago to go over a client that had a very specific need. And she went above and beyond what I have ever experienced with an app sales rep as far as helping me to solve this problem, and honestly, fell in love with the problem and was more concerned about solving the problem than she was about selling Commerce Sync if it wasn't the right fit. So that was amazing. I had such a great experience.
Remember Rosalind White, Roz?
I think it was Rosalind. Yeah.
Yeah, she's phenomenal. Yeah,
Yeah.
and to tie it all up in a bow, this is her sangria recipe.
That's awesome.
Ah, nice.
Not only is she an expert at customer stuff, and it's a real passion of her. She's a pro, but then also I'll be definitely passing this along. Also at sangria.
Fantastic. I'm going to go ahead and end the poll. So if you haven't voted, I'm going to count you down 5, 4. I went too fast. Wait, 5, 4, 3,
Push the button.
2, and 1. I'm going to go ahead and end that. And what we'll do is we'll send along your information to Stephen and his team, and they'll reach out to you. So yeah, no, I definitely wanted to share that because it was a wonderful call, and I really appreciated it.
Awesome. Oh, that'll be much appreciated by the team and Raz as well.
That's been my experience as well. You know, I've got a unique scenario that I'm excited about solving, and being able to think about from my client's point of view, it's a franchise. And so if we can solve it for one, we're going to be able to solve it for every location, which is huge for us. And, you know, this piece of the bookkeeping where they're struggling and their scenario is Stripe. So being able to pull in all of the deposits and understand the daily batches is critical for them. And we've not been able to get a really good fix for that to date. So I'm excited. I'm really looking forward to it. So I'll be sure to share how it goes.
All right. Well, thank you very much.
So here we want to make sure that everybody is reaching out to the website, making sure that you're checking us out on Facebook. This is where a lot of times you can see upcoming episodes. Also recordings. You can find the recordings also on YouTube, but they are in Facebook as well. And then we have some exciting upcoming episodes. Do you want to share, Heather, about LiveFlow? Because this was one that you were excited about last week.
Yeah. So if you remember last week's episode, we had done our apps to watch for 2022, and I demoed LiveFlow, and I was really excited about the tool. What it does is it pulls your QuickBooks data into Google Sheets, and it allows you to sync in real time. And so what was so amazing about it was they reached out to us immediately after that episode and were like, we want to come on and show everybody how to do it, how to actually use it. So they're actually going to do a 2-hour deep dive into how to use LiveFlow with different case studies and really digging into the nuts and bolts of it next week. So I am so excited about this episode because it really was one of the apps that I was really excited to learn more about. And now we're going to have the opportunity to really dig into it and see how powerful it is.
I think that also speaks to our community too. We're looking for solutions. We're sharing solutions with each other. And so this was one that you know was just on your radar. It was one of those apps that you've been paying attention to, and being able to share it with our community, you know, people responded to that. And so thanks to that response, because now they want to go on the episode and share more about what's happening.
Yeah, super exciting. Awesome. And thank you to our awesome champagne level sponsor, Ignition. And thank you so much, Stephen. This was such a wealth of knowledge. And I just thank you so much for coming on and sharing all of this with us. I learned a ton. And yeah, I'm just, what a great tool to have in our pocket. So thank you.
You bet. Thanks to you. Congratulations again. Thanks also to Liz. Thanks for hosting us, having us, thinking of us, and see you in San Diego.
Absolutely.
Fantastic.
And I would tell everybody, if you've got some type of integration situation where you're trying to bring in sales or point of sales or the e-commerce, I would make sure to reach out, because they've got a lot of solutions. And I dropped the landing page in, but we didn't cover all of it. We just covered a little portion of it to be able to give you a taste of this buy now, pay later concept that we're seeing. So I think that being proactive on this side of it is going to help us as we see this grow.
Definitely. All right, everybody. Have a wonderful rest of your Tuesday. We'll see you in a week.
Thank you.
Bye, everyone.